best in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
You're listening to the Financial Survival Network. This is Kerry Lutz. We are with Ned Schmidt of agrifoodvalueview.com and the Value View Gold Report. And as Ned likes to say, we're now in August. Nothing can go wrong with the stock market, right, Ned?
That's what I keep hearing. Every time I turn on a TV or look at my internet, the experts and gurus are telling me that I should sell my 2 children, put the money in the stock market.
Right. And hey, what exactly is the value of the marginal propensity to tweet?
We're leaving a lot of the prior conversation. Anyhow, what we were talking about is if you listen to the discussion and read the articles about what they're talking about, it's much like it was in January and February of 2000. This focus on trivial nonsense in these technology companies. I mean, I was reading one about Twitter that was trying to make an intelligent discussion out of the trend in the number of Twitter accounts, and trying to determine what was the trend in the number of tweets. That's all nonsense. I mean, 5 years from now, Twitter is going to be an insignificant subsidiary of some other insignificant media company. I mean, it's much like it was in those January, February 2000. You know, you get up in the morning and you turn on your computer and the Dow opens like it did Monday, up 150 points. And you're saying, what happened in the last hour that I didn't know about in the world? And there's nothing.
Yeah.
I mean, this week, the Dow is already up 400 points because Wall Street has decided conditions are absolutely perfect. There's no chance the Federal Reserve will raise interest rates till next, let's say, April, May, June, something like that. And the day before, they're going to be able to sell all their stocks and get out. And the broker's going to turn to them and say, sell to whom? And you guys are the only ones that own them. Then they got up Monday morning, or this week rather, and Putin had recalled the 2 Russians that were running the rebellion. I guess they're on their way to a gulag in Siberia or something like that. And so Wall Street decided Putin's is running home with his tail between his legs, and we never have to worry about him again, which is naive, foolish. As you and I talked before, there aren't many men as bad as Putin. So there's this attitude that you can't go wrong. You have absolutely got to be in the stock market. And the combination of this change in the Ukraine caused us to have a nice sell-off in gold today. And we're talking on Thursday afternoon, which is overdue. We needed to have this sell-off in gold. Silver had already been oversold and developed buy conditions last week about Thursday. And so gold was overdue. We really should have got today about Monday or Friday. So what we're set up for now is gold will be set up for good buying conditions Monday afternoon, Tuesday morning, something like that of next week.
Mm-hmm. Hey, what about silver?
No, go ahead.
Silver.
Silver is just on its back right now. I mean, the people that would normally be buying silver now are still chasing rubbish in the stock market, trying to find that $9 tech stock that's going to go to 109. And some of the gold stocks continue to be building patterns. Some of these stocks just have beautiful patterns. I mean, if you look at the pattern on EGO, that's Eldorado Gold, it's got a beautiful chart pattern. The stock crashed, went down to a lateral pattern, been in place about a year, and now it's trying to break out. That stock's a gimme now. I mean, it's just a setup. And, you know, we really have kind of 3 groups in the stocks right now. You got GOLD and AEM, which would not take much move in gold to push them to new highs. Then you got AU, BG, ABX, and EGO. That group takes a little more than gold, but those group of stocks could all hit new highs in the next 3 months, and the next 2 months. And when stocks hit new highs, they tend to keep going a while. There are people who just buy those, and they just live to buy those kind of stocks.
Right. So we're pretty close here, and the stocks have not been going down, even though gold has been slammed down pretty well, right?
Yeah. You're already, what's starting to support the stocks and make them somewhat resistant to what the boys are doing with gold on 81 days is there's starting to be hints of an improvement in their business. I mean, gold essentially made its first bottom in June of last year. December, silver was June of last year. And the price pressure is moving off these companies, and they've lowered costs. And so there's a hint of an improvement in their operations that we have not seen for some time. I mean, each month I try and figure out what these things are worth in terms of dollars and cents. And I actually have 3 of them that I raised the valuation on. Now, that hasn't happened in 2 years. It means that there is some fundamentals improving. And as far as the stocks as a group, the GDX, the number to watch on the GDX, which is the ETF for producing mining companies, is 2803. That was the high that GDX hit on 14 March, and it's at 2666 now. So it wouldn't take much to move that up and start making that. You know, when brokers and analysts and advisors put out things that are popping, that are making new highs and pictures looking better, the GDX and the gold stocks are going to start showing up on those lists.
So Apple is not the cure to what ails us financially, then, huh, Ned?
Right.
Because it just broke 100 again, you know.
Oh, well, you know, it's going to go up forever. I mean, if you put all your money in that stock, you will retire in the Bahamas with a better sex life. You know, it's just going to be wonderful.
So that's the cure to what ails is Apple. And hey, in the meantime, you'll be spending records amount of your disposable income for ground beef because that just hit a record price too, didn't it?
Yeah, and I was a little surprised by that because cattle prices have got so high beef prices have got so high, they've kind of been moving sideways for a while. And, you know, I think what the retailers are doing, they've got a story that beef are in short supply, they've been raising prices for a year, let's just raise them some more. Let's see how much we can gouge the public on steaks and ground beef. Now, I hate to say that, but I honestly think some of that's going on right now.
Mm-hmm. Yeah,
but we've got to... No, go ahead.
Yeah, well, obviously costs are going up, though. You know, I mean, we do have inflation in the system. It's more than 2%. And, you know, insurance, all your services are going up.
Yeah, and one of the things the retailers had long done was, you know, you used to be able to buy a 1 pound pack of ground beef. And they quit that, I'm going to say 2 years ago. You couldn't buy a 1 pound pack. They were all now £1.25 to £1.40. And so, you know, they got you by forcing you to buy more. They've exhausted. I mean, they're not going to get me to buy a 2 pound pack of ground beef. I don't know what I would do with it. So now they're trying to raise the price on it. So there's some of that going on. But, the beef picture doesn't look good. I mean, every week the USDA puts out a summary of the feeder cattle market. And you can imagine if you're an economist at the USDA, each week you've got to write 2 paragraphs on the national feeder cattle market. But for most of your life, it's been the most boring topic in the world. These guys are downright giddy now. You know, they're telling jokes in the analysis. It's so fun. But we've got a slight problem, though, in corn. And we need to talk about that for just a second.
Sure.
Last year was a bumper crop in corn that we harvested in the fall. We're going to harvest another bumper crop this fall. It's like flipping a coin and flipping and doing heads 4 times in a row. Now, as most of us have observed in the markets the last couple of years, these traders push things to an extreme. I don't care if it's going up or going down. And the price of corn in the futures market has been pushed to an abnormally low level. Corn is now going for about $3.75 a bushel. That's partly due to the pile-on in the futures market and partly due to the railroads can't move it. You know, I've said this now. I've been saying this for months.
North Dakota is shut down. Their railroads are shut down for oil as well. Yeah.
Warren Buffett needs to quit worrying about immigration and start finding somebody to run Burlington Northern.
Mm-hmm.
But anyhow, the problem this creates and the opportunity is that the cost to produce a bushel of corn in the United States is $4.30 to $4.70, depending on how you do the calculation. So this coming spring in the United States, if prices don't change, the U.S. farmer will lose money the moment he plants the seed. Now, these aren't tech companies that can go forever without making money. Farmer has to make money. So we're setting ourselves up for a serious problem in corn next year. We're not going to have as much as we think we're going to have. And the farmers are not going to en masse plant every acre on a losing basis day one. I mean, I don't know how much they're going to cut back, but we're going to see the biggest cutback in corn production in the United States that was not caused by weather in history next spring.
Yep. And yeah, so when we return, let's talk about what's going to happen with corn and other agricultural commodities on the Financial Survival Network.
FSN Radio. It's all about what's next.
The show's brought to you by Audible. Audible's back as a sponsor. Just go to audiblepodcast.com/FSN and you'll see they've got over 150,000 titles to choose from fiction, nonfiction, bestsellers, every category imaginable. They've got free apps. You can download and listen on your iPhone, iPad, Android, Windows Phone, every device imaginable. And unlike a streaming or rental service, with Audible, you own your book. So you know that I've been an Audible fan for years now. I've listened to over 310 books since I've had it. Last one that I listened to was called The Frackers, and I will give a hat tip to Jason Burak for that one. An incredible book about the history of fracking in America, in Texas, and how it developed in North Dakota. It's a book that you really got to check out. I'm reading one right now, or I should say listening to it, called The Sons of Wichita, about the Koch brothers and how that family developed an immense business worth God knows how much, hundreds of billions of dollars. Incredible book. There's so many great books. I love the Joseph Finder books, the Harry Bosch series by Michael Connolly, but you've got so many books to choose choose from that you'll have to find one. And Audible's got an incredible offer for you right now. Go to audiblepodcast.fsn to take advantage of it right now. Okay. The way it works is really simple. You get a free audiobook of your choice and a free 30-day trial membership. So check it out now. It's really great. It's easy to use. And look, if you're like me, you don't have the time to read as much as you used to. But if you're driving in the car or you're sitting out by the pool or the beach, you put on a book. It's an amazing service. I love it. You will too. Go to audiblepodcast.com/FSN. Take advantage of that free book and that free 1 month's membership now. You're going to love it. I promise you. And tell me some books that you like, that you've listened. I'll tell you some of mine. If you send me an email today to KHL@kerrylutz.com, I will give you my top 10 Audible picks. And I guarantee you're going to love them. Check it out now. audiblepodcast.com/FSN.
The Financial Survival Network. It's all about what's next.
So we're with Ned Schmidt. We're talking agricultural commodities. Ned's the expert on this. So yeah, people really don't understand, Ned, that farmers do have to make money, and we'll see food riots again if corn production really hits the skids, won't we?
Yeah, I mean, these are not farmers are not tech companies. They got a cash flow. They're individuals or even families. But now we need to remember that we have two major harvests in the world. We have the Northern Hemisphere harvest, which people in the United States are familiar. That harvest is China, the United States, Europe, and Russia. The other big harvest is the Southern Hemisphere harvest, which is in Brazil and Argentina. Now, since the calendar is reversed, we're in summer, they're in winter. Their spring is next month. September is the beginning of planting season in Brazil. Brazil's a big country in terms of latitude. It's a massive one. So they start planting corn in the southern tip of Brazil in September. That's when we may get the first indication of what's going to happen, because the Brazilians, even farmers, good farmers, their finances are a lot shakier than most. And so we'll start seeing this in September, October, and November when we get the numbers on the Brazilian planting. So this time next year, throw in what futures trading will do to it, and it'll all pile in. We could see corn at $3.75 now, trading $6 to $6.50 this time next year. If there's not that much of it, and so we'll have to see. Now that hurts somewhat Deere and AGCO, and it's not particularly good news for Monsanto and Syngenta. On Monsanto and Syngenta, they won't be hurt as bad because some of that acreage will be shifted to other crops, soybeans and such. AGCO and Deere are going to be hurt somewhat, and you rarely get a good time to buy Deere. I mean, it's always overvalued. So sometime this year, it's time to be putting some Deere in your portfolio and collecting some dividends. Same place thing with AGCO. Remember that AGCO, 75% of its business is outside the United States. Monsanto is always expensive. Syngenta is probably cheap, and its symbol is SYT. Agrium is hurt somewhat by its fertilizer business, but it's got this giant retail farm business in the United States, Canada, and Australia and New Zealand, which is going to help them. BG is the big agri-grain collector, big in Brazil, big in the United States, opening a new major port in Australia. And so they're going to be very big, bigger in the Australian grain export market, which is critical to China. I mean, they're just delivery boys, The grain is going to move from Australia to China. Somebody has to carry it. Then a stock that's been hitting new highs on the global meat shortage is JBS. It trades in the United States as JBSAY. And there is no other stock like this in Western markets. We have WH Global in Hong Kong, which just came public. So it's the only one. And then we come back to a group that you and I talked about before, is the animal health companies. They have caught on. Notice ZTS this is a stock that's unique in that we don't have much of this industry public. Zoetis is an S&P stock that pays a dividend, so it's going to lead the group. And one that's softened recently, PAHC, which is Philbro Animal Health, is another one. And then, as we talked before, we've got FMC is going to spin off its animal health and vitamin business. So, and that's a group that I think the street is going to, over time, overprice, because they do like to overprice drug companies.
Oh, yeah. They're going to jump on it. Yeah, it's just the trend on these because, you just see it, all these pigs dying off, animals dying off, and, what's happened in China, in other lesser developed countries, they have to get with animal health or big problems ahead, and they're not going to be able to meet demand. So we know this is coming. So as far as trends go, what about the drought in the West and Southwest, what that's doing to food prices? We don't really see a let-up in that drought. More of the same?
Texas has been improving.
Yeah,
the problem we've got in Texas, in western Oklahoma, is that it takes several years to rebuild a pasture. Just because it rained this year doesn't mean the pasture is all of a sudden a foot of grass. So that's still a problem. But on the other hand, the ranchers don't have any cattle to graze. So it's kind of a draw there. California, the damage being done to the agricultural industry in California is just horrendous. I'm not sure that California agriculture will ever recover from this drought. Now, the assumption in California is, as soon as winter gets here, it'll snow like it always did, and next spring we'll have all the water we need. So instead of doing something about water, we'll build a high-speed train.
Desalinization plants. What is the problem here? I mean, why can't they see that that's the way to do this?
You couldn't build a if you decided to build a desalinization plant in California, you couldn't get it done in 10 years.
Yeah, well, the way things are, but look, where there's a will, there's a way.
No, the environmentalists will fight you for the first 4.
Yeah.
Environmentalists are totally opposed to desalinization plants because it raises the salinity in the water around plants, and that might hurt a fish.
Yeah, it does that for temporarily. I mean, it's absurd. That's absurd. It's a big ocean.
I'm not saying it's right. Yeah, it is absurd, but it doesn't matter because, they have choked off the water to agriculture so they can save a couple of stupid little fish in the river that nobody cares about.
Yeah.
So the problem is, there's a good article in Forbes. I think that's why I saw it was a Forbes link, that the damage to the California economy of this drought is being underestimated. This may be the end of the California miracle permanently.
Yeah. Oh, yeah.
I mean, would you pick up and go buy a house in California that doesn't have any water?
You need a lot of Perrier. That's
right. But I did read that Nancy Pelosi's neighborhood does not have to ration water.
Well, that's
no comment. That's all I'm going to say on that. Well, I'm having a nice day. I don't want to say anything bad about anybody.
Yeah. Well, but it's definitely had an effect on all the produce and fruit and every lettuce, everything that we get here that we need. The California droughts raise the price of it all, and you see it in the increased prices of your food. So not much you can do about it. It is what it is, right?
It is what it is. That's right.
So hey, stay true to gold, stay true to your agricultural commodities and all of those allied businesses. Just tell us again, Ned, where we find your work, where we find your sites.
I have 2 sites. One is ValueViewGoldReport.com. The other is AgriFoodValueView.com. always, it's been a pleasure.
Hey,
I always enjoy it.
Hey, same here.
You brighten up my day.
Hey, likewise. And hey, we don't talk to you before the Labor Day weekend. Enjoy, and we'll definitely be in touch with you in September when things will be picking up, no doubt. Ned, and don't forget, go over to financialsurvivalnetwork.com, sign up for the newsletter, check out all the articles that are in there. We're getting them from hundreds of different sites around the globe, weekly, hundreds of articles. Really, it's one-stop shopping for all the information that you need to figure out what the heck is going on, because you're certainly not going to get it from the mainstream media. You're certainly not getting it from those bubbleheads on various alphabet media sites that just tell you to go keep tweeting and be happy and are trying to come up with the value of a Twitter account, which so many of them are bogus anyway. Just go over to FSN, and we've got all the links that you need to subscribe to the iTunes feed, to our Twitter account, to our Facebook groups, and all that stuff. Ned, we will talk to you soon. Be well.
All right, take care.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.